Ding, 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 ding. Live on there. Let's check YouTube's. Okay. What's up? Yeah, MJ. I don't know if you're hearing this morning, but doo-wop music. It's his SoundCloud actually. I wanted some royalty-free music to play. Turn that down too. Thanks for joining my friends, my good friends on Discord, my still good friends on YouTube, and my esteemed colleagues on TradingView. What I'm showing you right now, because I like to start the live stream off with some easy listening. Let me turn down the volume a little bit here. There we go. And some price action, usually something from the week. So this was this morning. We're looking at right now from about 10 or 11 o'clock on Bitcoin at the top and the SPY at the bottom. And if you haven't noticed, these two this morning, the Ichimoku pattern is a little bit different, but they move almost identically in lockstep with one another. And I make such a big point about this because so many people that are diehard crypto fans, they just absolutely refuse to acknowledge that the two are actually moving in correlation right now. No sound in Discord. Hold on, Jen. Can you guys hear me on Discord? Oh, you're muted. You're muted, Jen. So yeah, I just put a video earlier today, and a lot of my energy went into that. And yes, I'm engaging in just a little bit of FUD with Bitcoin. I'll chat with you guys just a little bit before we really get into that, because I really want to hammer that point home. If you've been watching the live stream, if you've been joining me, all dozen of you guys, you know that I'm not trying to keep people from getting rich. I really want to save people money. You know, if I was trying to sell people on a system, if I was trying to sell somebody on, following my signal service, then I would just tell people that everything's going to be okay. Buy my signals, buy my program, buy my education, and you'll make tons of money. Instead, I'm a professional manager of risk. I'm managing my own capital. And so I'm just doing what I see is in front of me. And what I want to do is focus on truth. And so I'm just trying to be honest with my assessment of what's going on right now in the cryptocurrency space. And by the way, if you're just joining either on YouTube or TradingView, ask me questions. I can talk the whole hour by myself, but I like answering people's questions and being engaging. People on Discord, post in the everything chat. That way I can try to read it in addition to the YouTube chat. What's up, Zygor? All right, I've got my windows arranged. Oh, thanks, TradingView. I love you guys too. What is that emoji right there? That's funny. Thank you. Thank you. Thank you. Thank you. So I love you guys' platform. I try to get people to sign up for it. It's very valuable. I'm not just saying that to promote it because you gave me 100 coins, which I don't know I can buy with that, but it doesn't matter to me because it's 100 fun points. But I do a lot of my work through TradingView. I use my alerts here. I even have Discord integration where the alerts come from TradingView through a webhook. And that's great. It's just awesome. It means that I don't have to learn something like TradeStation in Python. Yeah, you guys, the integration is really, really simple. I'm able to channel these alerts. And so today, even though I'm super freaking bearish, I'm not super bearish, I'm just bearish on Bitcoin today, this alert came through Discord and as well as through TradingView as well. So what I'm looking for is the spikes. And actually, as I was trading down here, we got this right here at about 11 o'clock. Now, what I'd like to see is some kind of a price spike and then close back within the range. Now, what's it closing back inside of? It's closing back inside the low that it made overnight. And more importantly, it's right here at this low and these past lows right here. So even though since October, since the liquidation crash, since about here where I posted, since the liquidation crash, since it was clear to me, it's just clear that gravity was going to force us down to this point. Now we're at a key level. No sound on Discord. Are you still not having sound on Discord, Jen? Hold on. Why are you not having? Hold on. Okay, let me try to fix that. 1 second. I think I might be able to fix that. So, test. Okay, hold on. Test. Can you hear me now? On. Oh, now I bet you can hear me on Discord. I had push to talk enabled. Okay, thank you. I didn't believe you at first. All right. So now we're up and running on Discord. Good. All right. So if you're on Discord now, you can ask me questions. So we'll continue on because I think a lot of people got the link to TradingView anyway. All right, great. So we're always at a critical point. I think I might say that too much as a meme, but this right here on this breach of this liquidation low, what I talked about in my video earlier, and I put a lot of my energy into it a few minutes ago because I wanted to get it out there. I wanted to be an independent video on TradingView. The main thing that I am really talking against, the reason I'm flashing this FUD in front of everybody with this is not a dip, is because so many people on all these other premium groups are talking about how just buy the dip. That's been the meme for years and years. It was a meme in the stock market back in 2013, and it worked, and it works in a bull market, but I don't think we're in one. It's my opinion, but I've been watching since October where we just didn't go. You had a test to the all-time high. You basically have two tests. It should have gone. It's just that simple. There should be enough bullish momentum to push this thing higher. If you're going to buy something at $64,000, let's just remove the fact that you can buy smaller increments. You want this thing to go to 500K. I want Bitcoin to go 500K. I want everyone to be rich and prosperous, but not enough people bought it to follow through. You have to tell yourself that you're going to make those kind of outsized gains. Now, what we had back in 2021, that dented a lot of the momentum, but it didn't kill it. And so we did a retest of the high. That's fine. But when it stopped breaking, when it stopped going up, that was a warning sign. And now what I've been watching for is on the simplest Ichimoku standard. And I talk about this all the time. I'm going to reiterate it because it's super important. It works. It works a lot. When price gets below the cloud and momentum gets below the cloud at the same time, that's your confirmation of a true bearish trend. Now, all you had to do the last time Bitcoin dipped was wait for just such a situation as that, price to get back above the cloud, let momentum, Chical, lagging span, whatever you want to talk about, get back above it. Now you can go long. And you would have been okay. Let's speed things up. Just fine through 2021. Had a little dip right here. But notice, even though it's poking its head below the cloud, momentum is still good. Still not bearish. Incidentally, that's also a 50% level. I like it. I like it a lot. That's your second opportunity. Even if you didn't buy it here on the breakout, you could have held through this, listened to people tell you that it's just a dip, and you would have been just fine because you had other technical factors, a lot of other confluence helping you out. But when you start seeing this happen, now you're in trouble. I said this a few weeks ago with Ethereum. When Ethereum was sitting here, when every other cryptocurrency was in a full bearish trend, Ethereum was holding its ground. Ethereum was holding its ground against the cloud. And as soon as that momentum got on the other side of the cloud, that's what I told people, your stop, if you're trading this, needs to be below. Now you're in a really tight spot. December the 29th, made a post about it. Now you're in a really tight spot. You do not want this to get on the other side of the cloud. And it is. Now you're going to get to that low. And now it's breaking. This works time and time again. If you want to be patient, you had the opportunity back in 2021 when it finally got back above the cloud. Everything, Bitcoin, looking at the daily, Ichimoku, you had your opportunity when it's showing you something back around $482 Ethereum. Now it's breaking out on the daily. Now you can go bullish. Again, back here, price is below the cloud, but momentum stays within it. The trend is still active. Good question. I'm using the classic Ichimoku settings because this is my live stream and I can talk openly. These new and better for crypto Ichimoku settings are made by someone that doesn't understand Ichimoku, the historical principle of it. It's not based on days of the week. It's not. I use 9, 26, 52, 26. And what's really actually important is the lagging span 26, because that's what tells you and also shifts the cloud to put it where it is. And they've completely screwed that up by having like a lagging span of like 30. Anyway, the point is to be consistent in whatever numbers you use. I learned, and for the last over 10 years, have been using the original. Works just fine for me. I'm not going to change it up. But people that want to have something to sell, something to talk about, they make things better. This is improved. You'll be a better trader if you use these numbers. No, you won't. No, you won't. The key is to train your brain for these kind of patterns, whatever the time frame or whatever the numbers that you're using. I use the classic settings. So again, you just need to be patient. And this has worked in many other times, not to scare anybody, but did it work when you had the last big bear cycle in the come off of 18? Yes, momentum and price both got on the daily side of the cloud, and that would have been your warning sign to avoid a pretty big drawdown on that. Had a little violation there, but again, if you had cut yourself back here, you wouldn't have been none the worse. What are we avoiding by getting out at that point? What's the drawdown percentage? 80%, 87%. All right, when it gets back above the cloud, we're going to buy it. Still not above the cloud. $150, $130 Ethereum. Wouldn't you love that? Okay, now it's above the cloud. Let's buy it. Let's buy it and forget about it. Oh, wow. That's all we had to do, huh? Okay, cool. So when and if Ethereum, Bitcoin, whatever, get back above the daily cloud, wherever that may be, it may come tomorrow. I'm sure people would love it. Or it could come in a matter of time. What may likely happen is this bearish is going to continue. You're going to have the cloud start to look something like this. And then price will eventually try to make its move above it. And at that point, you need to be looking for your momentum as well to get above it. Then you're in good shape. I mean, really and truly, if I had to look forward, this is just my opinion, I don't trade on Head and Shoulders. Although it is interesting that somebody pointed this out to me yesterday. Let's take off Ichimoku to make it nice and pure. What I see potentially happening is a classic left shoulder, head, and then we're probably going to try to settle down in this range at some point right here. And a lot of people are going to see this as a buying opportunity. That's okay. A lot of people are going to come comment on my videos. Ha, see? Because it's going to possibly rise off of that. But if it is a Head and Shoulders, it's going to make a right shoulder. And then if you read my 2021 letter to subscribers, if this, I'll hedge this, if this is a bear cycle, you will not have a very good investment. In other words, long-term opportunity in 2022. It could be 2023 before you finally see. Psychologically, you have to have everyone out to make it a good buying opportunity. Contrary to what most people think, when something has gone up hundreds of percent, the opportunity is not at a high. The risk is at a high. you have to wait until you have a situation like look, Bitcoin was still the future in the past. It was still the future back in 2017 when people were buying it up to 19,000. Okay, it was still a good buy. Now, but that's a long time ago. In modern times, this is BC, before Corona. That was in the before times. Okay, you still had an opportunity on the COVID crash to pick up Bitcoin at $5,000. Then, when everything was crashing, when the whole world was coming to an end, when I don't even remember back then. I've kind of blocked that out, PTSD or whatever. But why was Bitcoin $5,000? Why was no one buying it if it was the future at $5,000? That was an opportunity because everyone was afraid. Everyone was risk off. Everybody just wanted dollars. Everyone wanted to sit at home and not get the flu. That's an opportunity where the reward is much higher. You just can't buy into these things when everyone else is. When your grandmother stops asking about it, when that guy from high school stops asking you about crypto, when everyone has lost money and everyone thinks it's just the most dog shit investment ever, that's when you have a bottom on Bitcoin. Not when people are constantly posting on Twitter all these confirmation biases. And what I mean by that, I took this back on I took this, let me move my picture here. I took these shots back on December the 18th while we were going down from that. I mean, the liquidation event happened on the US jobs report on December 3rd. That was the big catalyst that really kind of kicked this off, got the charts to really go bearish. And midway through the month, there's a lot of optimism. Here you have the stock to flow model, fundamentals of why Bitcoin should continue going up. And you got these little standard deviation bands that people are drawing, and they're saying, okay, it's still within the model, still going to go to $1 million by 20 mid 2025, still $1 million. You're good, right? What I find interesting here is that, yeah, maybe this could be true, but when they're looking at these subtle deviations to the downside, they're saying like, okay, these subtle deviations to the statistical standard deviation are here. That means that we're at a bottom. They completely ignore this standard deviation to the upside because it's good. If it's their model, yeah, we should only have standard deviations to the upside, right? What if you had a standard deviation outside of this model, like the upside deviations here? Where would that take it to? That's what I would ask people that really believe in the stock to flow model. And then you had people using their technical analysis here where they showed, back in the summer of 2021, we had a break of the 50-week SMA. Well, here we also have a break of the 50-week SMA. And you see what happened there. And also RSI was here. So, and then, we're now at extreme fear. That's a bullish sign. And then here's the channel. Here's the channel I drew. And the last time it did this, it went up. And then, of course, people come through and they revise the stock to flow model. And kudos to them for revising their model and talking about how, this could be a deviation from it. Maybe I need to change things. Good. And now, of course, finally this week, the financial media, CNBC, talking heads, and articles are coming out talking about how Bitcoin is responding to interest rate fears. No credit to Norok on this page, that I've been talking about it since the beginning of December. I mean, I'm sitting here looking at. I don't need credit. I find it interesting that they've now caught on a month later. That goes to my whole derision about the financial media, how they need somebody to go on and say interesting things. I've been sitting here watching the price action. This was where the FOMC lockstep this morning. This was what the chart looked like this morning between the S&P 500 and Bitcoin. They're moving around the same events. And what their explanation on the financial media is crypto is moving like growth. Okay, my thesis is a little bit different. Crypto is being fueled by low interest rate credit. I've said before, I can go take out a line of credit. You might be able to as well. If you have a stock portfolio, even with maybe Schwab or whoever else, you can talk to the broker and they can possibly extend you a line of credit based on your stock portfolio to buy anything you want. You can write a check for anything you want as long as it's not stock. That's the one restriction that they can put on you. And it'll give you a floating interest rate of 2%, 3%, very cheap, which is influenced by our interest rates. And you can go buy whatever you want. That's absolutely affecting the price. But if the interest rates go up, that becomes a less attractive thing to do. Are you going to take out a 5%, a 7% floating rate loan on cryptocurrency? The math starts to get a little risky. Some people might. I wouldn't. And so that is the reason that crypto is starting to. And the reason I harp on this is because I get so much pushback from people that say, "Oh, the correlation is not 1-to-1." Like here's a chart of the correlation coefficient. Of course, it's not 1. It varies between the stock market on the daily chart, but I'm sitting here on the 1 minute, the 5 minute during the US market hours, and I'm seeing the correlation. They're moving to the same drum. It's just what I see. I'm just reporting on what I see. So we're into the stream right now. I can say thanks for joining, both on TradingView and on YouTube, on Discord. Oh, we got a lot of people actually. If you have stuff you want me to look at, some charts to look at, post them in the chat. I'll get to them when I can. I want this to be a conversation. Like I said, I can talk all hour, but the reason I do this is just because I love talking about markets and trading. So not trying to sell anything, but I will plug my social media. Join there. It's no charge. Like, share, subscribe, because I just want to get the message out to people, because otherwise people are just going to read why Bitcoin's still going to go to 100K by 2021 year end. I bet those articles still get more hits than somebody saying what I'm saying. So let's jump into the stock market real quick. I want to make an independent video about my predictions for 2022, but it really comes down to this. Oh, and I wanted to kind of segment my live stream up a little bit so I can make it into independent videos. So, all right, stock market, what is going to happen for 2022? The crash of all times is going to, no. I'm not going to try to sell the FUD. Everyone sold the FUD, fear, uncertainty, and doubt, back in 2021. Another reason I do this is because I literally won't name names, but I counseled somebody at the beginning of the year 2021 who their religious leader told them in, I don't know if it was church or what, that Trump was going to stay in office and the stock market was going to crash. And they believed both of those things. I at least talked them out of selling all their retirement assets. But basically, they had to find out for themselves that, Biden was going to be president. So I can't do anything about that. You can't fix that. 2022, I go into it the same way I go into 2021. Let's look at the statistics. I can give you all kinds of reasons why it's going to do this, why it's going to do that, but nobody really knows. All we can know is what came before, and usually it works. So I brought this up, posted it earlier this week. So basically we had a big 2021, 20% gains. And what does that mean? Well, this article talks about, it crunches the numbers, and it tells us that when you have something like this, the annual performance following a 20% gain. This is the chart. So, you have, of course, you have up years, more up years, the down years, and you, of course, have your outliers. But let's find the key thing right here. There's people, what they're saying, what they're thinking. Where is that? History suggests that after a gain of at least 20% by the benchmark, returns are comparably muted but not insignificant, with an average rise of 7.7%. The year after a big rally also tends to be followed by a positive finish for the index in the subsequent calendar year of 70% of the time. Gains have occurred consistently the previous 9 times that the S&P 500 has posted a 20% rise or better. Okay, so we got a 70% shot that the S&P 500 is going to close December, whatever the last day of the month is. I haven't looked, on 2022, higher than it is today. That's all we're going to say. And that's going to be close to 7.7%. Now, another thing that has worked, one of the big things I talked about in beginning of 2021 was what it meant to have a president elected with a unified Congress, both houses unified, same party. 2017, this was following the election of Trump. Here, where's November? Yeah, November 2017 was an up and to the right year. We're going to get back to this little price action right here in a minute. But that was what happened after the election. Same thing. President elected, unified Congress. Why that's the case, I don't care. That's the statistics. Okay. And so what it basically says is the year after election, the average was 6.5%. The second year, 7%. That's what we're in. Second year after the election. Third year, that's an interesting number. That's a 2023 prediction. We'll see how that happens at the end of the year. And then since 1950, the average annual rate of return, this is important. The average annual rate of return was 7.8% adjusted for inflation. Okay, hold that number you have, 7.68%. Let's call it 7.5%. The prediction for the presidential model is we'll have a 7% year. Between 1950 and 2019, this data is a little bit old, the stock market experienced gains 73% of calendar years. Go back to the prediction here. The year after a big rally also tends to be followed by a positive finish for the index 70% of the time. History suggests after 20%, the average rise 7.7%. They're all the same. It's just another year. That's my prediction. That's my big, bold title. Warning. It's going to be an average year. Not nearly as sexy, is it? But that's what the statistics suggest. There's nothing else I can really say with confidence. I'm going to operate under the pretense that we're going to have a different year than 2021. And now here we go into my opinion. And this is based on my experience. You had a stellar 2017 up and to the right. Yeah, you had some little dips of 5% in there that got everybody nervous just because they were outside the norm. But man, 2018, that's another story. That's where you got your comeuppance. This right here, let's mark it off. This was January of 2018. Rose, that's a parabolic right here, followed by a taper tantrum because the Fed was tapering. That's what everybody's scared about right now. That's what everybody is so fearful about in the stock market. Is the last time the Fed tried to raise rates and taper its bond buying, the market threw a taper tantrum. Everyone always thinks that the next crash is going to be like the last one. That's why people, since COVID, were trying to scoop up cheap houses, hoping they would get another opportunity like 2008. They thought that we were going to get another housing crash. Instead, the opposite happened. The assumption that as the Fed is raising rates, that that inflation is going to be the catalyst. I think because everyone is assuming it, it makes it almost the least likely vector that that's going to happen. Maybe it is, but crashes they come out of left field. That's the nature. No one's prepared for them. No one's got protection. No one's buying puts. No one's hedging. They're all long this one thing, and something out of the ordinary, no one expected, except maybe a few people that get to brag about it after the fact, they get burned. And let's go down to the daily here, because I want to talk about 2018. My opinion, that we went through the statistics. My opinion on the upcoming year is, as a first principle, it's not going to be 2021. It's not going to be up and to the right. That's my opinion. You just don't typically get 2 years in a row of that kind of action. I don't remember it. I mean, there was 2013 and 2014. This is this nice rise right here, 2013. And this is where I started my career. I didn't realize at the time how crazy of a year this was. I did not. My mentor told me it was, but this is really kind of unprecedented. You don't see this in history that much, this long of just a up and to the right cycle. But then after 2013, you had this October crash. People were superstitious about October. You had a 10% or 9.2%, depending on where you draw it from, a 10% event happening in October. And then that really dented a lot of the momentum, dented a lot of the confidence. People get lulled into a false sense of security in a nice little slow bullish trend like this. Volatility starts to kind of dry up. Everyone assumes that the gains are going to go on forever. And then they get a wake-up call, and that dents a lot of the momentum. And then that sets up for a really this was a problem. I got burned in the 2015, which was another minus 10% right there. And then after this little brief hiatus, we go on to the next cycle. And then again, you have that up and to the right, lulling people into a sense of confidence. You have a big parabolic move. This is awesome. Everything's going to go on forever. And then you have that denting of momentum, which then sets up for a very hard year to be long. Now, that being said, I had the conversation with somebody earlier this week about what the 2018 market meant for me. This was when I was still trading a lot of options. It was an option buyer's dream in 2018. You had this dip right here, which again, remember, with Ichimoku, this is the daily, long term. You can see this coming on your weekend homework. Momentum got below the cloud at the same time as price. You even had a pullback within these few days right here, which sets you up. That's when you can start buying puts, okay? All these people that want to buy SPY puts when the market takes like a little 1% dip off the high and they just lose money, they'd be better off just buying SPY shares. I wish they would do that instead. This kind of market, if you have something like this, is where you start to buy puts. Volatility expands. That means the prices of your options just generally get lifted in addition to the delta that you're getting off the puts. I think they posted a screenshot of a person that said their best day of their career was October the 29th. My best was in October. I'll just admit to you, this hurt. I spent the whole year getting back, and I did not get back to break even on my portfolio until October. And then I was in good shape for that year. And then, well, I got another Christmas present in this downward cycle right here. Look at this. This is the market where you buy puts. This is, if you want to be contrarian, if you want to be a bear of the stock market, this is what you need to look for. It only happens every few years. I'm not saying it's going to happen necessarily in 2022, but this kind of market, a high volatility, difficult to just set and forget unless you're super long term. This kind of market, a trader's market, can happen after a big up and to the right year like we had. Every year is going to be different. That's why I love trading. The market is constantly different. That's why I love it. Every day is different. Every day is a new challenge. So you can't assume that what worked in 2021 is necessarily going to work in 2022. You have to be looking for opportunity. You have to be reading what the market is telling you. We're still bullish. There's no reason to short the market right now. No. Again, just the basics of Ichimoku. Everybody got a little scared back in October where we started poking outside the cloud, but momentum stayed firm. Still bullish. So by that token, by that analysis, we still have a ways to go before this starts to get bearish. Now, coming into this market, we're starting to go into earnings season. So what is earnings season? Let me see if I can pull it up in Thinkorswim for us here. Brought up this practice account here for Jen, who asked the question, show me months. Okay. So this is the month of January. I just want S&P. One second. See if I'll do it. No. How do I can't remember. Oh, here we go. Public S&P 500. There we go. So earnings season is upon us. Now, what earnings season is basically about 6 weeks of the year. It's really going to kick off in earnest the 25th of this month, January, and it goes on through February. And basically, you have a cluster in about 4 to 6 weeks where all these companies, all these major companies, are releasing their earnings reports. That's when you start to see a lot of individual movement on stocks. And as I'm going through some of these charts on individual stocks, what I'm noticing, just off the top of my head from my research this week, CSA, Comcast. A lot of these dips and bottoms happened on this December sell-off that we had. In other words, if I was looking to play something like Comcast for the run up to earnings, I had to take it mid-December. So a lot of these opportunities, I'm not saying there's no opportunities, but a lot of these they're already in play right now. If you look at some of the favorite stocks that are already going up, a lot of the dips that they happen, the buying opportunities. What was I looking at this week? They're in play. They're happening. They're going on right now. So be looking, but a lot of the things that are happening right now in the stock market are going to be based around earnings. So be watching for that. It's not coming up next week, but it is coming up later this month. And I think really, if the market is just kind of boring right now, the stock market is boring, it's because it's waiting. It's waiting for that. All right. I've ranted for a while. Let's look at some of the comments and see if we can answer some things. Do I want to talk about LCID? No, I don't. And you know why. That's annoying. That's annoying. That's really annoying. Yeah, I got out here. It happens. It happens. You can't do anything about it. When it breaks the range, You can't, and also got out of ARC. That's painful. ARC is doing the same thing, except now, as I posted, it's established a bearish trend. I tried, I held on, I believed in Kathy up to this point, but I mean, I got to go on what I know. I got to go on what works, and what works is managing risk. I can't sit there and bag hold because I see an instance where it comes down. I mean, it even held. I mean, it was a good level. It was a good level. It still held it, but my risk controls said my stop had to be here. The reason it was like that was because if I'm trying to shoot for 3-to-1 and I'm sizing my position accordingly, I'm not going to. I mean, yeah, if I shot for the whole high, I would. But if I want a 3-to-1 back up to the 50% here, that's where it had to be. That's where I had to be tight. Now, can you go wider and play for the top? Yeah, that would be a 3-to-1 trade, and you'd still be in it. That's fine. But that means you take a smaller position. The size of the position I took for what I was trying to play, basically the retest up to the top, which would give me a 3-to-1 or then a 6-to-1, it just didn't work out. It didn't work out. It's okay. It's all right. We can come back next week and it's bounced off this level here and come down. Who knows? But I'm on to the next trade. Average is better than a crash? Yes, it is. Okay, good question for K Freedom. Let's go back to Bitcoin. I'll try to get. We got questions on YouTube. Yeah, I'll talk about YouTube. Isn't Bitcoin seen as anti-inflation? Yes, that was the theme of 2022. There's only so many Bitcoin that are going to be made, mined, created. Thus, they will never go to zero. I'll say that with confidence. If someone were to say, hey, Bitcoin's worthless, will you give me $1 for one? Yeah, I give you $1 for one. Yeah, I mean, just for the sake of saying, like, I've got a USB stick with 1 Bitcoin on it. It's a collectible. It's an NFT. There's only going to be so many made. It's always going to have a value. But just like everything else, something is worth what people are willing to pay. And right now, people value it at $42,000. They did value it at $69,000. I heard a quote, maybe this week or the last, from an old-timey investor who he really put it into perspective. When you buy something and it goes up 50%, it doesn't mean that you're super smart, that you're really good at valuations. What it really means is that everyone was incredibly bad at valuations of a year ago. If you have a 50% gain on something, it just means that people were really not good at putting a proper valuation on it in the past for them to miss the fact that it would be worth that much in the future. Now, this is a fundamental investor who still believes that balance sheets and companies making money matter. He's an old man. About time to send him to the home. But one of these days maybe that will matter. Maybe fundamental analysis will come back. I'm trying not to knock fundamental analysis because what I've realized is that it is a conviction holder, just like technical analysis is for me and anyone else. I see a level, I get into a trade, I'm holding that trade because I have my structure around it. The reason I'm doing it is because of whatever technical analysis setup I'm playing. It's just the same as someone saying in 2018 that Tesla is a company of the future. It is. And that's the reason that you hold Tesla when everyone else was shorting it, is because you believed in Elon, you believed in the company for fundamentals, and you won. Pat yourself on the back. You maintain your conviction. That's what works for you. If that's what you want to, if that's how you want to trade with fundamental analysis, do it. I don't want to knock people for that, but to me, it's fun to talk about. That's why they call it fundamentals. MJ, when I'm doing price action analysis, I use Ichimoku. If you'll notice, when I draw 50% retracement levels, the reason I do that is because the 50% retracements are basically the levels of Ichimoku because all the levels in Ichimoku, the lines, are based on, they're not averages. They're not moving averages. They're moving medians, meaning they're based on the high and the low. And so what I did just to kind of simplify my charts was I just started drawing the 50% myself. But it all comes from a foundation in Ichimoku. And then when I made this retracement levels indicator, that's one of the things that I used was I basically just took it, made a really long duration 50% retracement level, and then depending on the time frame you're looking at, it's going to be pretty good and faithful to those 50%. And so I use 50%, which in TradingView here, it's, if you notice right here, I'm just using the fib tool, and I've taken out all the other Fibonacci's. Some people really still like them. I just don't find much use from them because, I mean, how much different is this to this? It's just, I keep it simple. The longer new trade, I can always tell a new trader because their charts are covered in indicators and lines. The longer I've traded, the less stuff I use on my charts. Thoughts on precious metals? Well, Josh, if you read my 2021 letter to subscribers, I made the bold claim that I expect precious metals to appreciate at the rate of inflation this year. Come on, gold. What do you want it to do? I mean, really, what do you want gold and precious metals to do? Do you want the world to end so that they will go up? Really? Like, I mean, be honest with me. Like, what do you expect gold and silver to do? I mean, yeah, I get it. You get a pretty nice rise from 2018 up to here, 66%. It's hesitating from that. But if inflation is such a big deal, then shouldn't gold and silver be going up? Well, yes, but it should be going up at the rate of inflation. Ultimately, hype is what drives everything in this current market. And you got to have people that are really bullish on something. You got to have something moving. And it could move, but overall, it's just not that interesting. Now, that's not to say I don't have scans running on it. That's not to say that when I see technical setups happening, it is. But I made a call on silver last year where, what was it? Yeah, it was yep. Was it October? No, 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 no. Where was it where we were talking about that silver short squeeze that they were putting articles out about? Why am I not seeing what I want to see? There was some sort of false breakout. Yeah, here it is. SLV. It was specifically on the silver ETF where there was some charges that the people that were running, and don't quote me on this, there was some kind of drama over the ETF and how it was, oh, that's right, it wasn't reflecting the spot silver price and it was being manipulated down. And if you just bought silver spot or bought the ETF or whatever, you were going to really show it to JP Morgan and Goldman Sachs. And I went back and I produced news articles basically like clockwork. Every 2 years, there's this organized campaign in the media to get people to try to buy silver to screw over the hedge funds. Almost every 2 years, there's one of these articles that tries to get retail average investors to buy silver because reasons. And it has worked and happened maybe 1 out of those 5 times. So basically, you had like a 20% success rate in it actually causing a silver short squeeze. And that could have been because of anything. Like, that was basically back in the 2011 period where you actually did have a big move. Yeah, this big move right here happened. So kind of correlates to that. But this right here, again, when I talk about failed breakouts, man, if people would just listen to me, I screamed from the top of my lungs when it did this number right here that this was a big problem. Big problem. Do not buy that message. I mean, hedge funds and institutions, they don't put out information. They don't go on CNBC to help you make money. They go to talk their positions and convince retail traders to help provide liquidity for them to exit what they're already profitable on. So anything that you read in the media is not for your benefit. It's not to educate you. It's either to keep you dazzled so they can sell you advertisements or fool you into making money for somebody else. So I tried my best back in 2021 with silver to warn that this was bogus, that this was bullshit. And without even knowing the news, without even knowing what's going on, just on a technical standpoint, when you come up here and you have a failed breakout, it's over. It's over. Happens all the time. It's happening in crypto. That's why I've been screaming about it since October. There's one that I've been talking about that, here's one in PGNY, a stock that I'm still bullish on. But again, you had back in November of this year, you had 2 chances to break out and it failed. And so at this point right here, well, I'm holding long term from back in 2020. So I'm still bag holding, I guess you could say, but I'm bag holding something in profit. But still, this is an issue. Watch for this. You don't need to read the news. You can look at price. It's all in there. What about let me finish with the YouTubes. Oh, you're just trolling. I can't read that, Mr. Russian for ONG. I don't know. Yeah, the Fed are going to raise rates. They need to. They're going to raise it this year. And then when the market crashes, they'll lower them again. Don't worry. Don't worry about the stock market. Jay Powell's got you covered. So, what about pot stocks? Okay. Next thing we can look at is the Marijuana ETF. It's cheap right now. It's cheap right now. How low can it go? It's something that people could ask. Well, let's ask the holders of Wish how low it can go. Oh, I need my soundboard. What would be a good sound for that? So, that being said, as I mentioned earlier, and in my letter, you need to be looking for the theme or the meme, if you will, of 2022. Last year, early on, it was the most shorted, the meme stocks, the GMC and the AME. No. Yeah, GMC and AME. Yeah, we'll go with that. Before that, it was EV in 2020, EV stocks. You had, of course, Tesla in 2020. What was that other one? NEO. These are themes, different sectors, stocks. No matter if they're making money or profitable, they will just go up with the hype and the theme. This is what you want. Before that, it was blockchain. I'll make sure I get my order right. So blockchain, well, Riot was a big thing in 2021 with that too. But back in 2018, it was a big deal as well, along with everything. Tilray, I remember that was a big thing back in 2018 as well. So pot stocks back 4 years ago now. No, about 3 years, about 3.3 years were the theme of 2018. So you really just have to be on the lookout this year for what the theme is going to be. I don't know what it's going to be, but I'm going to be watching for it. A couple of things. It could be energy shortages because we've cut a lot of production and things. I mean, if you look at oil right here, this is kind of crazy. You know, we all know what happened there. Oil went to negative if something can possibly do that. But you know, sitting here at $78, we've totally forgotten the time period that I remember where oil was trading pretty consistently for multiple years, from about 2011 to 2014, about 4 years, in this range around $100. I mean, a nice solid $100. I mean, we could still go up to that. And then back in 2008, there was rampant speculation that drove the price up even further as well. I mean, if you get, I don't know if you, I'm sure most people were at least driving. They were at least 16 years old back in 2007, 2018, when, you know, people were lining up at the pumps to buy gas for $5, $6 a gallon or more, depending on what state you were in. And then suddenly, apropos of, you know, the financial crash, it just dropped tremendously. Wow. You get, it's easy, and even I do forget these sort of things happening, but they can happen in any market. Another potential, well, like I was saying with pot stocks, I mean, I'll say what I'm pretty confident. My highest conviction is that the theme of 2022 will not be cryptocurrency. I could always be wrong, but I just don't think it's going to be cryptocurrency. And you need it to be the theme to get it up there where you want it to be. And I think where you want it to be, you being most people that are long from these ranges here, is the 500,000, the $1 million that people have told you. I hope your dreams come true. I just don't think they're going to happen this year. Maybe they'll start back in 2024. But by then, I think a lot of people are going to be out of it. I really want to, I get interested in cryptocurrency, like I said, psychologically, when no one is looking at it anymore, when everyone's written it off, when CNBC doesn't have it as a ticker in the bottom, then I get interested. And that is probably going to happen, you know, if we, let's go look at this real quick. Bring this up pretty much in every live stream, but let's see. I've been in cryptocurrency since 2011. I actually bought my first Bitcoin for $20 in this move up. So I got my FOMOing out very early. And then you had a 91% drop. Now, a lot of people are like, oh, I'd love to have bought Bitcoin at $3, but try to put yourself in the situation and add some zeros there. Just try. And you'll understand why when you see one drop of 90%, a drop of 75%, a drop of 81%, and then a drop of another 84%. When you see no less than 4 drops of 80%, why, when you're somebody that's been trading it for a long time and you see this, you do not see it as opportunity. You see it as risk. I can't help it. Can't help it. I've seen things. And so I'll get interested again when I get interested. But again, as we're coming to the close of this, I'll wrap it up. I'm not trying to keep you from these gains that you want. I'm trying to help you protect your capital for when there is an opportunity. If you set yourself up to DCA into cryptocurrency because this is your future, that's fine. But use proper sizing and portfolio. I get really I'm not frustrated because it's their money. They can do what they want to. But when people say outlandish things like, I don't want to own any stocks, I don't want to own any bonds, I don't want to own anything but cryptocurrency because everything else is worthless boomer trash, I think you're doing yourself a disservice. I think there's other stuff out there. I think, like I said, there's going to be something in 22. There's going to be some market in 2022 that blows up. Every year has its theme, and you got to find it. And then you can make a lot of money. But you can't expect one year to be the same as the last. The market is constantly changing. And as a trader, you have to adapt. You have to read what's in front of you. And right now, in my estimation, Bitcoin's entering a bear phase. I told you, when I start to get interested in Bitcoin again, when I think I'll come on here and I'll say, okay, guys, I'm okay with you getting long. Get long when it gets back above this cloud on the daily, when it gets back into the 50,000 something range. When and if that happens, what did you miss out on? You missed out on 35% gains. Oh, well, it's okay because it's going to 500K, isn't it? That's a rounding error. But if you don't wait, you're going to be in for a lot of pain if the bear cycle continues. Just trying to save you from it. Any last questions? I'll give you guys a few more minutes. Let me read through the Discord. Let me plug here and say I run a social Discord for trading. It's not a premium Discord. Someone asked me this week, hey, do I need to subscribe to your premium to ask you questions? Because that's what a lot of people do. No, I am a trader. I make my money trading and investing. I don't need your money. I just want to talk to you. I just want to hang out, maybe get some ideas from you, maybe get some feedback. Somebody tell me I'm wildly wrong and teach me something that I'm not looking at. I ran out of time today, but I really wanted to sit down with you guys and go through something that someone in my Discord presented to me, which is order block trading. I heard it, and I originally thought what they were talking about was market, like order books, but no, it's not. It's basically a candlestick pattern. So maybe we'll do this for the next live stream if I get time. But I'm always looking for new stuff to learn. I don't know when there might be some technique that I can incorporate into my style. So even though I've been doing this for 10 years, I'm constantly learning. That's what I like to do. Hello. Okay. If I have time today, can you please explain about Signature Bank as an example and Spike Alert and the fib retracement and when to enter? Okay. So I will do that. And we're going to use Bitcoin as an example today. So let's move everything else. So I have an indicator that I coded for TradingView. I call it Spike Alert. I need to call it something maybe sexier. It basically, and I'm giving away the secret here. Okay. So you can pay a low rate of $99 a month, and you can no. All you gotta do is just ask me, and I'll give you access to this retracement, or excuse me, the indicator. What it does is it identifies when price does this, spikes down below lows and highs, and then closes back above the red line, which is the Tinkinson from Ichimoku. It's pretty simple. This is a spike that I like today in Bitcoin. It tells you where a potential bottom is, where a potential reversal is. And then the crosses right here, this is your stop, right below the low, and then up to here. Now, this, being that we're in a bear market, is not going like it should. But this was something I posted on Discord when it happened. It was right before where is it? Ethereum. Where's December 3rd? December 3rd. Ah, there you are. Why is that? I'm embarrassed. 1 second. I had the shorts turned off. User error. Problem exists between keyboard and chair. So right before on the US jobs report with Ethereum, this is what I really like to see. This is how I use the indicator. You see this price spike of volatility right here. You can see it yourself, but the indicator just helps you identify it. I look for a certain clearance number. We're not going to go into those details, just basic, simple. You have a prior high that it's matching up against, and then you also have it right at a 50% retracement level of a prior move. This is a go sign. This is what kicked off that move down. And that's what I look for. I spent so much time getting stopped out on those sort of events that I decided to code it into a strategy. And it's what makes me a lot of money. I lost a lot of money early in my career getting shaken out, as I'm sure a lot of people did, on these sort of events. But this is what helps identify me potential reversals. Does it work all the time? Nothing in trading does. But with experience and adding these additional factors to it, doing it at support resistances, that's where the money is made. That's where you can actually find that alpha, those outsized gains. And so what I'm looking for now is for that spike to hold, but I don't know if it's going to if this is a bear market. So hopefully that gives you a little bit of a synopsis on how to use it. For those that are already following me, you probably have access. You can see it. You can actually set alerts in TradingView, which is really powerful. Go to here to the condition, go to the spikes, and you can do any spike, choose once per bar close, and this can send you an email, notify on the application, do a pop-up. I love TradingView. It's freaking awesome. But you got to do this for every single time frame and every instrument that you want to watch. So that's how you use it, basically. You're going to get a lot of these. You're going to get a lot of these alerts. Some of them are noise. The way you sort it out, like this one right here. This one right here, you can either call that noise or just one that didn't work. But you see, when they don't work, it can often be a powerful sign that it's going to go the other way as well. So you can use it as an inverse signal too. It's open-ended. It just identifies these little price movements, and they can oftentimes be a great trading signal one way or another. So nothing magical about it. Nothing to sell you here. It's just what I believe in. When I find other indicators that work, I'll share them with people. Send me a message on TradingView. I'll get to it when I can to add you access. Yep. Just want to help people out. All right.